Malaysia might be feeling the cost of living squeeze, but on mortgages, Malaysians are quietly winning big. A new six-country comparison shows Malaysians can save more than 200,000 over the lifetime of a typical home loan, making Malaysia the region's most borrower-friendly mortgage market. Here's the punch. On a 30-year, 200,000 loan, Malaysians pay about 173,419 ringgit in interest, while a similar buyer in Indonesia pays 378,292 ringgit. That's 204,873 ringgit more than the same size mortgage. And definitely, we have our expert here on the line to help us understand on the property market, especially for Malaysian market, is UIIQI co-founder and Group Chief Executive Officer Kashif Ansari. I want to say thank you very much, Kashif, for joining me. Definitely, at end of year, we want to take a look at all aspects of economies, and we take a look at real estate in Malaysia. And your report says Malaysians can save up to 204,000 ringgit over the lifetime of a mortgage compared to other ASEAN buyers. How representative is this figure for the average Malaysian today, especially urban buyers purchasing homes above 500,000 ringgit, where prices are much higher? Are we truly saving, or are we simply paying less interest or much more expensive homes?
Hello, and always pleasure to be here. I think that's something really interesting, and the good part is Malaysia needs to understand how blessed they are when we compare to the market, what good opportunity they have when it comes to investment and real estate investment. So what we have done is basically taking an average out, like if you are buying a house of 200,000 and take the mortgage, how beneficial for Malaysian to buy a house. The other thing to do this exercise was there are a lot of misconception in the market where they say, like, especially the first time home buyer, do I go for the mortgage? Is the interest rate high or low? But what we are trying to tell over here, the market is the most attractive at the moment, and this is something really attractive. So another thing, by comparison, and this is something really interesting when you play with the data and the numbers. Imagine in Indonesia, you pay 1.9 ringgit in interest over 30 years for every 1 ringgit of the home. So basically, you're paying 3 home for that. Compared to Malaysia, is only 0.9 ringgit, less than a ringgit in interest for over 30 years. So what we are trying to tell to the buyers is like so affordable, so achievable. And I think in Malaysia, if you take a loan, I think it's very productive. So whatever you'll pay less in Malaysia compared to this, we want to encourage the first home buyer. Go for it. I think you're so blessed. I think this is a good time.
Definitely looking at this data statistics, the number, probably more buyers, more confidence to purchase house mortgage in Malaysia. And Malaysia may be borrower friendly in terms of interest rates, but household debt to GDP is already above 80%. Does this suggest Malaysians are financially advantaged, or does it mean we are becoming more comfortable carrying long-term debt because borrowing feels cheap?
Interesting. And then, when the 80% comes up, everybody blows up and get worried. I think the most developed nation, this is quite normal. And I think this shows that, it's being the mature market. What Malaysia, especially Bank Negara, is focused on is debt service ratio, which called DSR. I think this is something we need to understand. That means that they don't limit total debt, but they don't try to make sure, try to make sure that the borrower can afford it. And I think this is something was one of the reasons, if you look into the mortgage in Malaysia, most people successfully repay their loan. That is something really good. So we don't have to worry, and then the market and the banks are also looking into that. Secondly, always remember, this is another interesting. Household asset is 2.1 times higher than the total debt. So what does mean that every dollar that household owe to the bank, they have asset worth more than $2. So it's quite secure. So, when we look at the mortgage, whether 80% debt, definitely there is a huge asset sitting on it. And that's how the Malaysia we feel, there is nothing to worry about. And I think it's quite strong situation.
And also, the comparison is based on a 30-year, 200,000 ringgit loan, but many Malaysians now take 35 until 40-year tenures or refinance multiple times. When we factor in longer loans durations and repeated refinancings, are borrowers generally saving money or just spreading repayments over a longer period?
It's a good question. So if you look at the ASEAN now, Thailand had come up with even the 50% mortgage time. But answer to your question, and for general, all the public, when you go, the best way to pay less interest is to pay your loan off early, not to take additional loan or to refinance, to take equity out of the property. Some people have the risk tolerance and they repeatedly refinance and take capital out. That's their choice. Longer loan terms, refinancing mainly improve the cash flow. And that's the reason, the longer I have to pay less installment, but technically you're paying higher interest. So what we discussed about 0.9, the earlier, that how you benefit. So if you take a loan on the house, you just make sure that you pay off and don't increase that. So then it's something feasible for you when you invest in the property or the real estate. Even longer tenure refinancing, it's a good making home financing here, but I think people, they definitely benefit from that.
And also, you attribute Malaysia's mortgage advantage to strong governance, EPF and liquidity and transparent pricing. How resilient is this advantage if EPF withdrawals rise, banks tighten lending, or global financial conditions worsen? Is Malaysia's borrower-friendly position structural or heavily dependent on the current policy conditions? Help us understand on this.
EPF is a structurally great advantage for Malaysia. Amazing numbers. So what we have seen, the track record, it means Malaysian economy is doing good. And the kind of structure EPF has given to the Malaysian economy and the structure is, so obviously we all want economic growth to continue at a rapid pace. The advantage of having strong governance is that when the economy slows and the system continue to work well. And I think we have seen in 2008, global financial crisis, the Malaysian real estate market, we don't have those kind of situation, what we have seen in West. This shows the Malaysian infrastructure or the structure when it comes to financing and borrowing, the banking, is quite strong, which gives a really strong signal. EPF, one more thing, Bank Negara has clearly mentioned that they have enough assets to withdraw. So when they allow people to take withdrawal, I think it's okay. It's definitely supposed that. Secondly, like gig worker bill 2025, bringing more funds into EPF. And now, like even the workers. So you're talking about 1.2 new people coming into EPF, more funds, more liquidity. So I think EPF is strong. Their asset back is quite strong. Their numbers, their investment is everything quite structured. So this is, I think it's a positive, nothing where like any signals are going on. Good sign.
All right. We're also going to take a look on the incentive or also the policy, which also involves stamp duty exemptions and incentive for first-time buyers extended until 2027. Is there a risk that these incentives are already being priced into higher property values, and once they expire, demand weakens and buyers are left less protected than they appear today? What's your thought on this?
I don't think seller have the pricing power to force buyer to pay their stamp duty, saving in the higher purchase price. That would only possible in the market with shortage of listing, where you have seen people are bidding to get the property, those kind of situation. If one seller wants to pay more for their property because of the stamp duty exemption, as a buyer, you can just purchase somewhere else. So when the stamp duty exemption expires, buyer will have to pay those duties. That's why it's such an effective policy, because it saves buyer money. I think it's a good thing.
All right. We want to take a look at the low borrowing also that costs help everyone, including investors. Do Malaysia's favorable mortgage condition risk crowding out genuine first-time buyers by encouraging speculative demand? And should policymakers consider stricter differentiations between owner-occupiers and investors?
I think there's enough supply in the market for everyone. And don't forget, the investor typically have to meet tougher conditions, rather than the first-time buyer. investor usually have to have a bigger down payment. Currently, you have seen 40% down payment, 60% LTV. So, and you know, like all those incentives what the government have giving to the first time, like they don't even qualify or not even do for like which has support for the. I think the policies Malaysia has set up and the kind of real estate is quite protective, and there is no sign, no room for speculators to come in. That's the reason the Malaysia real estate market has performed quite good, and it's a mature market. That's what we are seeing. The growth is, you know, is stable. We are not seeing what happened in Dubai or Hong Kong where the price shoot up so high. I think this gives the confidence to the Malaysian when it comes to real estate investment. This is stable, mature market, and good time to invest.
Rashid, let's take a look. Are developers and banks already pricing in investors' demands, and does the indirectly raise entry prices for first-time buyers even when interest rates are low?
Like, I think that this is something which we totally was expected, right? The interest rate in the future, if you're seeing, the interest rate will be definitely going down, but the cost of construction has gone up. And what we are looking into it, like the construction cost is going up, even the interest rates are will be going up. But so like prices will definitely going up in the future. So like what we have to look into that is like the current pricing, whatever is available, is this is the best time to get into it, because inflation and it's the market. You know what, I think Malaysian investors and buyers, they have to look into that. We are part of this global community. So the prices are going up globally. It's not about in Malaysia. So the cost of construction has going up, whether it's, you know, the steel, the cement, everything. So definitely the prices will go up, and then even the interest rate goes down. So you'll be seeing higher prices.
Considering our market condition right now, should Malaysia consider a first home priority mechanism like allocations of quotas, balloting, owner-occupier only period for certain projects, or would that eventually a little bit distort the market?
I think the policies, the government is quite focused, and they always consider to look for people who are the first time home buyer, and the kind of incentive has been giving to them is quite amazing. So they are quite protected, and you know, like as I mentioned to you earlier, so not even getting the loan is easier for the first time home buyer. They have their policies. So the policy of everyone should get a home. So what we are trying with all this data is like, this is the time you have the right policy, you have the right product, and the interest rate is so good, you are gaining. So, you know, like again, the misconception, like, will I, if I borrow a property, if I take a loan, will I be paying 2-3 houses? No, you might be doing in Indonesia. But Malaysia is a total different policy. You're a first-time home buyer, your LTV is higher, your rate is good, your you know, like you can get more incentive. So that's so I think it's quite protective, and it's quite benefit and favorable to first-time home buyer and for the Malaysians.
And also, Kashif, looking ahead 5 to 10 years, what is the biggest threat to Malaysia's borrowers-friendly mortgage environment? Rising interest rates, slower income growth, fiscal pressure, or property oversupply? And what should policymakers fix now to prevent today's advantage from becoming a future risk?
So what Bank Negara, you know, you have seen their latest report. What they're seeing, they think two things. What can be the reverse scenario, which is household incomes goes down and house prices goes down. If these things happen, definitely this is something to, you know, worry. But they regularly test the bank to make sure their borrower can survive such a situation. In worst scenario, you know, like for example, one family member might lose their job because of a recession. Can they still pay their mortgage? Or they have enough money left over for their other needs? You know, it's not about like paying the installment or the mortgage of the house. You have feed, you have to eat, you have to gas, everything is needed. So after the latest tests, what Bank Negara concluded, banks and most household would be able to withstand that. They call severe house price and income shocks. So I think by doing that, Malaysian are quite resilient in a way, like they are quite, they have muscles to manage and handle the situation. So until unless it's the worst case scenario, but Malaysia rental, the mortgage situation or what's current situation is quite healthy. And I think that's something quite positive.
Kashif, help us also understand the situation. If rates rise, who breaks first? B40 first-time buyers, M40 upgraders, or leverage investors? And what's the earliest indicator of stress that we should understand and establish first?
I think if you see the stress test, like the Malaysian overall in general, like it's not about the people who are just taking the loan now. I think they are sitting on a good asset. So they're trying to understand, like, like what we discussed earlier, the Malaysians have capability of paying their loan back. We don't have that much of bad debt when it comes to property. They have the ratio of 2.1, so their assets are higher. So interest rate, like 5 to 6 years, I think going forward, we are seeing the interest rate definitely is going down. They're not going up. So when the interest rates are going down, this is the time where they refinance or something, which definitely it helps them. But current situation, quite healthy. I don't see there'll be any shock. Interest rates are definitely going down, but it won't be that much of a concern when it comes to real estate. But what we are encouraging over here, and then the message by doing all this data and the research, is like those people who have not even the first-time home buyer and then keep on thinking like, I don't have the money. Is it the right time to do it? I think this is the time where you go out and look for your mortgage and go for buy a property. What we are seeing in the region, and again, like how our this report was, the ASEAN, Indonesia, Vietnam, Thailand, Philippines, it's much higher. So you being part of the global family, things are going in that direction. Maybe in 10 years time, we will be discussing, like it's unaffordable. The new people can't afford the property. The property price will go up, the interest rate will go higher. But this is the time where everything helps buyer to get into the real estate market. So I think that's why it's quite helpful.
And you also mentioned that it's very important to take a look at the data and statistics to understand the market currently, the market conditions, and the direction of the growth. And also, you also mentioned one of the biggest aspects that we also focus is income growth. But in another situation, if the income growth is slow, is the bigger problems loan affordability, or is it's going to be the house price to income ratios? And which should policy target first?
I think the house prices is still very affordable and quite decent. I don't want to use the word cheaper. I'd say affordable. The Malaysian real estate market, the house price is much affordable, much healthy. So there's a room to grow. We are not seeing anywhere the house prices will go down, because like what we discussed earlier, the speculators are always out from Malaysian real estate market, which helps Malaysia real estate market very mature and strong and stable. So any kind of shocks happen, 2008, what happened? 8% down compared to the other countries where 35 to 50% the property price has jumped down, right? Fall down. So what we are seeing in for Malaysia real estate market, definitely we won't see any much kind of shocks. Secondly, what everyone needs to understand, go to your neighbors and look where they are. Their purchasing power is same like Malaysia, but the prices are 50-60% higher than Malaysia. So what we are seeing, like whatever is available for 200,000, 300,000 or 500,000, I think 500,000 is still much affordable and better compared to, because of the policies the government has set up. They don't bring a speculator in, which helps all the Malaysian investors, buyer, homeowner to be protected. I think these things work for sure.
All right, that is very comprehensive sharing for us to understand deeply on how the market property sector works, on policy, incentive, and understanding more on the markets from various of aspects. Maybe I want to add last one, Kashif, on oversupply. Is it the total number of units or the mismatch, wrong location, wrong price buy, wrong type? What is the biggest mismatch right now?
What we have seen from 2024 to last year, the oversupply is going down, which shows again the market is getting more mature. We don't have any kind of that much of oversupply situation currently in Malaysia. The other interesting part, what we are seeing now, the adaptability of the people, people, they totally understand. It's a human nature, like they were not ready when the prices comes up, and they thought like maybe there'll be some kind of a correction, or maybe we hold, and whatever being launched, because try to understand, if a developer has launched with a certain price, or if I am a buyer and if I want to sell, I have a certain kind of price which I want to liquidate or sell. But I was not getting that. That's where it happens. Now the situation is quite different. All the properties, majority of them, you have seen those who have invested, and their cash flow was when they borrow the rentals has gone higher. So the rental going higher, everyone is now who wants to liquidate that, because of the rental, their installment, the mortgage payment has been taking care. Not only taking care, they're getting extra money out of it. So, like the more rentals are going up, and I think, to conclude, something I want to really say, the Malaysian economy has done amazing. The new jobs has been created. The new jobs, when it comes to, like whether it's data center, tech realty, AI, these are the things we are bringing high income people, whether it's Malaysian, whether they're foreigners. So it all boils down to, like the investor on the real estate side. So this is something also helps the real estate investors. And then, like they are not worried about, like they're going more into buying properties. And I think we are clearing the stock what have been there earlier.
All right, definitely, I want to say thank you very much to Kashif Ansari for helping us understand the bottom line that Malaysia is still a borrower-friendly mortgage market, and that's a big national advantage, not just a personal win. And Malaysia save up to 204,000 ringgit, and this advantage must do the right job. Help real families build a financial independence, keep the housing market stable and predictable, and make the path to first ownership easier, including the spot like the full stamp duty exemptions for first owner. And then we know that Malaysian, because its cheap borrowing starts rewarding leverage and speculation more than ownership, then what is now a strength could become tomorrow risk. Again, I would say thank you very much to JUI IQI co-founder and Group Chief Executive Officer Kashif Ansari. Definitely all of our discussion here will be featured in AstroAwani.com and across all social media platforms.